Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news of a new inquiry into the conduct of Aussie banks. But first, American productivity rose in the March quarter from a year ago, but fell from the previous quarter, mainly because wages have started rising faster than output, and first quarter output took a tumble due to weather and strike action. Those results will have been noted by the Fed, who have been looking for signs of quickening rises in payrolls. It bolsters their case for raising rates, another reason equity markets are uneasy. Tomorrow's non-farm payrolls report will be crucial data for their next meeting, which is still 2 weeks away. Equity and bond markets were somewhat surprised by the news. Also uneasy is the IMF, who have publicly asked their Fed to delay raising rates until 2016. They worry about the flow-on impact of falling bond values and rising interest costs, especially in Europe, although they couched it as needing to wait for greater signs of wage and price pressure in the US. Rising interest rates are also on the agenda in China, who said overnight that it is about to remove the interest rate ceiling its banks can pay for deposits as part of its opening up of its economy. In Brazil, their central bank has raised interest rates for the 6th straight time, and their OCR is now up to 13.75%. They are struggling to contain stagflation, that is inflation without growth, and are shrugging off growing discontent over higher borrowing costs as it fights to regain investors' trust and confidence. In Europe, Greece defiantly announced it won't or can't make this week's €300 million payment to the IMF, and it will bundle all its June payments together and pay at the end of the month, if it can. In Australia, there's to be a new Senate inquiry into the way banks and others allegedly engineer defaults of clients to sell them up, even though they've never missed a payment on their debt. It is to be led by a senior government senator. In New York, the US Treasury 10-year benchmark yield is holding up at its higher level in today's trading. It is now down just 2 basis points to 2.34%. The US oil markets are lower again today, with the US benchmark price now back to $58 a barrel, and the Brent crude is at $62 a barrel. The gold price is down another $8 to $1,176 an ounce. The New Zealand dollar is also lower this morning, currently at 71.2 US cents, 92.6 Aussie cents, and 63.3 Euro cents. The TWI is at 75.2, and that's its lowest level since September 2013. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.